Hi there, guys, and welcome to this week's Midweek with Indiacharts. I'm Muskan Kapoor, and I'm joined here with Jay Vora, and we're going to discuss what the market did in the past few days and how it ought to be in the past few days. So let's just get started without any further ado. My first question is related to the US market. So, is there any data point which has been released by the US recently that can influence the Fed's rate hike decision in the coming future? And is it something that's happening, some specific action that you would like to tell us about, or so you can enlighten us about the same?
Yeah, so we saw the PMI data coming out. Now, for the first time, it has come up above 50, and above 50 means that the economy is in expansion mode. Okay, so that is a good data point, which shows that the US economy, which was earlier slowing down, it is now inching towards the path of growth. But I don't know, something is not really adding up, because when we see the US retail sales, the month on month, there was a decline of 0.7%. Then, if you see the inflation data, yes, that is coming down. If you see, there is a strong payroll data that is there. So I am not sure what is really happening, because the jobs data and all is telling us that the economy is strong, but the retail sales is down. But on the other hand, this week, which was a bit of a surprise, that was the PMI data, which was actually a beat. So I think it was better than what the consensus was expecting. So it is actually telling us that the US economy is now actually a lot more resilient than what people thought. And earlier there was a case of a recessionary phase, or hard landing. Now more and more the narrative is turning towards a soft landing, or maybe we see a mild slowdown and then eventually picks up. So in that entire backdrop, 25 bips is expected by the Fed, and I think from there on we need to see how the data unfolds. But as of now, the expectation in the market is that maybe this 25 bips hike, and there will be one more 25 basis point hike, and then after the Fed will keep the rate unchanged for a while until it sees furthermore data which warrants furthermore hiking or no. But that is the expectation, that overall 50 basis point hike is expected, within which 25 basis point we can expect in the coming meet. Maybe after that you can see one more 25 basis point hike. Now, in terms of action, there is a lot of action that is happening in the US indices. So more or less, if you see, the index is flat, but there is a lot of action happening in stocks. So for example, yesterday First Republic Bank, that was down by 50% or so, because again the concerns are floating around that deposits are being withdrawn, and banks are getting into troublesome phase. So that is one thing. But on the other hand, if you see, Google and Microsoft, they posted better than expected results, and due to which Microsoft, I think when I last checked, the pre-open rate was indicating an uptick of around 7%, and that is huge for a large cap or a mega cap like Microsoft. So over there as well, a lot of action is happening in the stocks, but overall indices are more or less flat.
Correct. Makes sense. But is the recessionary environment, the scare, has it started to slow down, like actually started to sort of settle in now?
So yes, like I said, the data seems to be suggesting that, because we are having a strong payroll data, then the inflation is coming down. So effectively, yes. And also you are seeing the PMI data, which we saw this week. It is indicating an expansionary mode. So that all is positive, and that is tilting the narrative towards that there might be a soft landing, or maybe there might be no recession at all.
Correct. Makes sense. Moving on, I want to understand how you interpret this particular reading that has come in, which is the CFTC's weekly Scott data, which is showing record shorting. So, what do you think about this?
So COT data is nothing but the commitment of traders, which CFTC highlights, and it is actually showing a record shorts. So let me share my screen. So if you see over here, this is the CFTC data. So it is telling us that there is a record shorting that is happening in the US market. Okay, you can see this data point. It tells you that the negative shorting is somewhere around 3,40,000 or so. Okay, and this is most even since 2016. So this is the only available data which we have in investing. So it is almost at a record high if we take past 5, 6, or 7 years of data. Now, despite of such record shorting, again the US indices are not falling. Okay, so this tells me that if a certain barrier is crossed, okay, in the key indices, I expect that there could be a good short covering rally that can kick in. So let me show you the chart of SNP. Okay, so if you see SNP, it is struggling around this area, which is 4150 to 4200 kind of levels. Okay, I think that once this resistance level break, that is where we can see a good short covering rally that can kick in the US indices. And until then, I think we might end up just trading sideways until we don't see this breakout happening. So for SNP index particularly, I'm looking at the level of 4150 to 4200 area. I think once that is taken out, that is where we can see a real action in the US indices.
Correct. Makes sense. Moving on to our Indian indices, there's not much really happening. Are we going to continue this dull market phase, or are we actually going to see a trending move sooner in the days to come?
Right. So if you see Nifty index, that is actually behaving a little differently, especially from the Asian counterparts, because if you see the Asian indices, if you see the Asian indices in the recent past, they have seen a correction. Okay. Taiwan. Then I think only Jakarta was the one, that has held on. But if you see Thailand index, that has seen a correction. Even Shanghai has seen a very sharp correction in past few days. But in that overall context, Indian indices are holding out, and that is good because that tells you that there is some strength that is prevailing in the Indian market. And now if you see the chart structure, okay, there you can see that Nifty index had broken out from the falling channel, and post that, okay, post the breakout from this falling channel, you can see that this entire consolidation has happened above the breakout point, okay, which is very positive. So I think once this level is taken out, okay, which is 17,863. So over here, that is also around the 50% retracement mark of this entire fall. You can see over here. So once this zone is taken out, that is that 17,852, 863. Once that is taken out on a closing basis decisively, that is where the Nifty index is expected to first, test the 61.8% retracement level of the entire fall, which will again be an important resistance. Which is somewhere around 18,100, and once that is taken out, it can rise higher towards the upper end of the channel. So the more time it takes and it consolidates over here, the higher will be the upward targets of the channel, because again these are dynamic levels and it can keep inching higher, right? So that is how the Nifty index is set up. Now only one interesting point is that if you see Sensex, okay, that has actually not broken out from this falling trend line. Okay, it is So that is little different, and it is only in today's trading session that the Sensex has broken out from this falling trend line. So you saw for the Nifty index, right, that it broke out, then it consolidated over here, and then it is now trying to inch higher. Whereas in Sensex, the chart structure is little different. It is only breaking out now. So the idea is that once this high is taken out, it is expected to retest this high, and again the levels will keep coming as and when it clears. But this was one interesting observation which I wanted to highlight. Now, most of the index within the small cap, I mean, most of the Nifty index, be it small cap or mid cap, they are behaving similarly, okay, wherein they have broken out, okay, and they are consolidating above this breakout point, and they are just waiting for the highs to break. Once the high is taken out, that is where you can expect the rally to resume. Now, in this case as well, we initially start with the Fibonacci retracement levels, and once these levels are taken out, so for example, in this case, 61.8% is somewhere around 31,500. So once 31,500 is taken out on a closing basis, okay, that is where you can expect the next level on the upside, that is 32,132, and then you can expect the up move. I mean, the up move to go back towards the previous high, which is somewhere around 32,940. Okay, so that will be the upside level. So once, like I said, 61.8% is taken out, 78.6% is the next level, and post that the highest point, that will be the level to watch out for. So overall, if you see, all the index, especially the Indian indices, they are showing strength, and we can see in the screen. So it is Nifty sector indices. Yeah, but if you see, apart from the IT index, okay, which is trying to make a comeback, you can see all other indices, they have been rallying and they have been inching higher. And in fact, many of them are trying to break past the previous high. Now, once that is done, basically they will continue their higher high, higher low structure, and that will keep them, in an uptrend. And that is where you can actually use averages or maybe a rising trend line to trail the reversal levels and ride out the whole trend. So that is how the entire setup is. I think for the Nifty index, we are looking at this point very closely, that is 17,860, which is the recent high. I think once that is taken out, that is where I expect the next leg of up move to continue, because like I mentioned, that this entire resistance level was broken. The Nifty index consolidated over here, and now it is, it is setting up for a next leg of up move. So we have an interesting week ahead. Because last time what happened was that after this big red candle was formed on previous Monday, okay, the entire price action has happened within that candle. Okay, so we are waiting for this candle to be taken out, because on a weekly chart, if we do, if we do a weekly chart, then this is nothing but a bearish engulfing, and the Nifty has somewhat been hesitant to close above the 20-week average. So with the break of this high, it would mean that the 20-week average is taken out on a closing basis, and even the bearish engulfing is negated. So like I said, that we are looking out for this level, that is 17,863. I think once that is taken out on a closing basis, we should inch higher and we should see momentum picking up in the market.
Correct. Makes sense. So we're basically this week in the process of something happening in the future. So the process part is playing out right now. Once that's over, we will probably see a significant move in the coming next week, hopefully.
So basically what we are seeing is just a consolidation after an up move. And once this consolidation is complete, the up move should resume. And not to say that there are a lot of small and mid caps that are already popping up. I mean, you can every day see a list of a stock, gaining in double digits. So that is happening. So overall, there is momentum in the market, but on the headline index, we need some confirmation. and that confirmation point is nothing but 17,860. So once that is taken past, we can see a broad-based momentum in the market.
Makes sense. So we're looking out for something to happen eventually. So yes, thank you so much for today's session. It was really helpful. Thank you.